Something critical is unraveling behind the scenes of the U.S. economy. And it's not just another inflation scare or interest rate debate. It's a slow-motion breakdown of the one institution that has propped up the entire system for decades, the Federal Reserve. For the first time in modern history, the Fed may be on the verge of losing control. For most people, the Fed feels like a remote academic body that adjusts interest rates and releases jargon-filled reports. But in reality, it's the engine of the entire U.S. financial machine. It influences borrowing costs, credit creation, liquidity, and investor confidence. And right now, that engine is misfiring in ways that are starting to spook even the most seasoned analysts. The signs are everywhere. Core inflation is sticking stubbornly above target despite the fastest rate hike cycle in 40 years. The bond market is flashing recession warnings with inverted yield curves that have persisted longer than ever before. And perhaps most concerning of all, the Fed's own balance sheet is showing signs of stress as it attempts to unwind trillions in quantitative easing while trying to avoid a full-blown credit freeze. This isn't just policy miscalculation, it's structural fragility. The Fed has spent the last decade printing trillions of dollars to stabilize markets, bail out institutions, and keep the illusion of stability intact. But those tools are losing their effectiveness. When rates were near zero, the Fed had room to maneuver. Now, with debt servicing costs soaring and inflation still high, that flexibility is gone. The consequences are already playing out. The housing market has stalled under weight of unaffordable mortgage rates. Credit card delinquencies are spiking. Bankruptcies are quietly rising, especially among mid-sized firms with floating rate debt. And behind the scenes, the repo market, where banks lend short-term money to each other, is showing signs of dysfunction, just like it did before the 2008 crisis. The Federal Reserve was once seen as the savior of last resort. Now it's looking more like the arsonist holding the match. Every rate hike adds pressure to a debt system already stretched to its limits. And every attempt to tighten liquidity risks triggering the very collapse the Fed was designed to prevent. This is where things get truly dangerous, because once the Fed loses credibility, not with the public but with the markets, it can no longer steer the economy. The illusion of control vanishes, and when that happens, panic sets in. Investors no longer trust forward guidance. Bond yields spike unpredictably. Stock markets become untethered from economic reality. And worst of all, foreign buyers begin to abandon U.S. debt, triggering a spiral that the Fed cannot contain. And here's the twist. While the Fed is caught in this tightening trap, a parallel system is rising. Digital assets, decentralized finance, and blockchain-based monetary systems are gaining momentum. They're not just experiments anymore. They're alternatives. XRP, Stellar, and other blockchain protocols are being tested for real-time cross-border settlements. Tokenized U.S. treasuries are being issued by fintech firms. Central banks around the world are piloting digital currencies with programmable features and built-in compliance. The infrastructure for a new system is being built in plain sight. Even the International Monetary Fund has acknowledged that the next global reserve system might be multi-polar shared across digital platforms instead of anchored solely to the dollar. That shift, if it accelerates, will dramatically reduce the Fed's influence over global liquidity. And the U.S. government knows this. That's why we're seeing a surge in regulatory actions against crypto platforms. It's not just about consumer protection, it's about control. The existing system is fighting for its survival. And the Fed is at the center of that battle, trying to manage inflation, prevent collapse, and suppress alternatives, all at the same time. But cracks are showing. Foreign countries are increasingly settling trade in non-dollar currencies. BRICS nations are openly discussing a commodity-backed currency to rival the dollar. U.S. treasuries are being done quietly by key global players, not for short-term gains, but to de-risk from a system that looks increasingly unstable. What does this mean for you? It means we are entering a phase where monetary policy is no longer predictable. The traditional signals, interest rate forecasts, Fed speeches, inflation targets, may no longer matter if markets stop believing the Fed can deliver. That's a shift of seismic proportions. It's the difference between managing risk and managing chaos. And if the Fed does lose control, the implications will ripple across every part of your financial life. From the cost of borrowing to the value of your savings, to the stability of your investments. This isn't just theory. It's the logical outcome of a system stretched beyond its limits. But with chaos comes opportunity. If you understand what's happening, you can position yourself ahead of the shift. That means reducing exposure to assets that depend on a stable, Fed-controlled system. It means exploring new rails, decentralized systems, tokenized assets, and blockchain-native platforms that are insulated from centralized monetary failure. And most of all, it means being early. Because when the Fed does lose control, the transition won't be polite. It will be rapid, disruptive, and unforgiving. Stay focused, stay sharp, and above all, stay ahead. If you want to be positioned for what's coming, subscribe now. This is wealth signaling. This is how you outpace the system. This is also why some of the most seasoned investors are no longer asking whether the system will bend, they're asking when it will break. They're increasing their allocation to assets that exist outside of traditional monetary policy reach. Think gold, Bitcoin, and blockchain infrastructure tokens that aren't just speculative tools, but building blocks of a parallel financial system. Even institutions that once dismissed decentralized finance are now quietly preparing on-ramps. BlackRock, Fidelity, and Citi are developing tokenization platforms. Visa is running trials on automated payments using stablecoins. JP Morgan has tested its own blockchain-based settlement systems with real clients. The narrative has already shifted internally. They know the next system is coming and they want a seat at the table before it becomes a table. But here's what makes this moment so unique. Unlike past monetary shifts that were driven by political treaties or war outcomes, this one is being driven by math, by debt, by digital evolution, and most importantly by the erosion of belief. Belief in the dollar, belief in central bank omnipotence, belief that the system will always self-correct. Once that belief collapses, the rest follows fast, and belief is a fragile thing. If you're sitting on the sidelines thinking there will be a clear signal when it's time to move, you're missing the point. The shift is already happening, not with headlines, but with architecture. It's happening in APIs, pilot programs, cross-border tests, and liquidity protocols that quietly reroute trillions. This isn't about fear. It's about clarity. The kind of clarity that cuts through noise and sees systems for what they are, not what they pretend to be. Because once the illusion of control evaporates, the only people who thrive are those who already stepped outside of it. If you're watching this, you're early. Don't waste that advantage. Now is the time to take radical ownership of your financial trajectory. That doesn't mean making reckless bets. It means understanding the macro trends that are reshaping everything we thought we knew about money, credit, and control. It means moving with intent while others wait for permission. Because the biggest risk isn't being wrong, it's being late. And when the reset begins, late becomes locked out. History shows us that when major financial institutions lose the trust of the markets, they don't regain it. If you want to stay ahead of this shift and protect yourself from the fallout, subscribe now. The future isn't waiting, and neither should you.